Welcome to West Harbour. It was a great presentation by Tony on Victoria. I'm actually from Victoria, was born and raised in the Fairfield area. So we're leaving Victoria now. We've maybe caught the seaplane from the Inner Harbour, landed in Vancouver Harbour, and we've taken the sea bus over to North Vancouver, and we're at West Harbour. So I'm Dexter Wilkin, VP of Finance with WCPG, and here's the agenda I'll be walking you through today. Lots to cover in the next 18 minutes or so, and we'll get right into it. There we go. So here's the management team. We also have Jim Ferry in attendance, our COO. And some of our current projects on the go. So WCPG, a bit of an overview. We provide design, builds, construction management, development management, and asset management services for residential and commercial projects in British Columbia. And of course, we also offer private equity real estate opportunities. Happy to chat more offline about any of our current projects on the go, in addition to this West Harbour project. And here are some of our past projects as well. I'll draw attention to the Mission Walk and Ocean View buildings. Those are two other private equity real estate opportunities we already completed and closed. Those buildings finished at the end of 2022. And this year, we actually paid out our second distribution to investors. So those buildings are both performing very well. So the North Vancouver market, it's a market I'm really excited about. I think the demographics in North Vancouver really represent a great recipe for success for a purpose-built rental building. Population growth, high rents, and low vacancy. So the project location is very centrally located in North Vancouver at the corner of Bewick and Marine Drive. I actually live about a block away from this site in a townhouse, so I'm a little biased, but I love this location. It's just west of Lonsdale and just east of Capilano Mall, with a lot of great amenities nearby. Awesome access to nature as well, with trails right out of your front door. And some cool drone shots of the site. So this is looking north to the mountains, a shot looking east there to Lonsdale area, and then also the beautiful shot of downtown Vancouver. So the building itself, we're going to have 70 residential units. There's going to be an affordable component to that, which I'll get into a little later. We have a ground floor commercial space as well, and you can see the unit mix at the bottom there. So some highlights of this investment. First, it's really de-risked from a development standpoint. We have our development permit, we have our excavation permit, and we've actually started excavation last month with shovels in the ground. We have a secured commercial tenant, so that ground floor commercial space. We have a 10-year triple net lease executed with a reputable daycare operator. Oops, sorry. And then high rental demand. North Vancouver was ranked as the second most livable city in Canada by the Globe and Mail. Financing, we've been approved by CMHC for the financing. That loan has now funded. We actually received our first loan draw this past Tuesday, which was exciting. Exit potential, there's a ton of demand right now for new purpose-built rental products by institutions. Expedited timeline, as I mentioned, excavation started. And for investors who were to come in for the October 15th closing, which I'll get into, it's a duration of about 27 months, which is really great compared to a lot of other projects where they're going and buying a site now. They're looking at about a 3 to 5 year approval timeline with the city of North Vancouver. Meanwhile, we've already started and are looking at completion into the late of 2026. CCDC contracts, I'll get into a little later, but provide fixed prices for construction and development. And then cost overruns, WCPG's introduced a couple programs that are unique to this investment opportunity, which I'll also get into a little later, that provide a lot more comfort and certainty for investors. So 3 key benefits I wanted to highlight. I touched on the fixed price contracts, those CCDC2 contracts. What they're going to do is lock in the price for the development and construction work for the building, which is a very high percentage of the total project costs. The additional funding protection program. So what that's going to do is reduce the need for any cash calls from investors. So when you put your money in at the start, you're going to have a lot more comfort knowing you're not going to be asked to fund more money through that construction period. And finally, the rate protection plan. I'm not sure how familiar people are with the CMHC MLI Select program, but what you do is you get approved at a ceiling rate in your application. And then if interest rates are higher when you complete on the building, you have to buy that rate down. So there's a rate buy down cost that can get quite expensive. WCPG's agreed to cover the cost of that buy down up to 4.2% from the 3.85, which is about 1.5 million. So I mentioned that shortened time frame. Where we're at with this project, I think, and just the general sort of approval timeline with the city of North Vancouver represents a barrier to entry for competitors and also a competitive advantage for our investors in the project. We're going to be able to deliver this purpose-built rental stock faster into a market that desperately needs it. So I wanted to touch on the commercial component and the affordable components. The commercial components, we have a 10-year triple net lease executed with a reputable daycare operator. And on the affordable components, we're going to have 10% of the units, so 7 units that are affordable at what the city of North Vancouver refers to as mid-market rents, rents that are 10% below the CMHC average rents. And I put these two on the same slide to really highlight the fact that the commercial component is locked in with a 10-year lease, and these affordable units are going to fly off the shelf. They're going to be leased up as soon as we get to completion. So when you add the income from those two pieces together, it's a really high percentage of the income of that building that we have a lot of comfort on right at completion. Here's a picture of our development manager, Zach, with our excavation permit in hand on site and our development permit. And so the opportunity, highlighting here that we're looking to raise some more Class A units. The Class A investors are going to get a 60-40 profit split up to the point where they receive a 10% annualized return, reducing to 50% thereafter. And you can see at the top there, CMHC approvals in place. And at the bottom there, just showing that we're going to bring in the majority of the equity now. And we're reserving about 7% of that equity for completion because typically these buildings will have a bit of a cash shortfall as we attain lease up in the first few months after completion. Some key dates, next closing is October 15th, with that final funding expected to be around May 15th, 2026. Property management, we'll be hiring a property manager to run the building and help with lease up. So currently in negotiations with a few that we're looking to hire in the next few months. Assumptions. I really like this slide, highlights our assumptions that we use in our pro forma to value the building, generate our expected returns for investors, compared to a lot of what we see in the market, what appraisers are telling us, what other experts are telling us. So, at the top, we've used 2% vacancy in our pro forma. North Vancouver had a 0.6% vacancy in 2023. Operating costs were just under $8,000 a door. Ryan ULC appraisers quoted us more like $7,000 to $7,500 a door. And then at the bottom, investment duration, we find a lot of competitors' pro formas. What they'll do is they'll show you that they're going to sell the building right at completion. When in reality, institutions want to see lease up and stabilization in that building. So we've added on 6 months onto our duration to reflect the fact that the sale is most likely going to close once the building's stabilized. Really quick, here's how we value the building. We get to an expected value of $68.8 million. And rents, everyone knows how high rents are in Metro Vancouver. North Vancouver is no different. What we do at WCPG is a ton of due diligence on the rental analysis, going out, hiring an appraiser, talking to property managers. We also do secret shopping. We'll go inspect buildings ourselves. So we've landed on 2024 average rents at about under $5 a foot. Seems really high, but a competitor building in North Vancouver that just actually sold obtained lease up at $5.40 a foot. So the budget and capital stack, you'll see the top 2 lines of the budget here. Those are those fixed price contracts I mentioned. So you can see how high of a percentage those project costs are that are fixed in relation to the total project cost. And then below at the capital stack, how we're going to fund those costs between debt and equity. And I'll spend the next few slides touching on those CCDC contracts. So there'll be fixed price contracts for the construction work and the development work. Contract signed with WCPG Construction, and then development signed with WCPG. And next few slides are going to also show you what's included in those contracts and what's not included in those contracts. So here's what's included in the construction contract for the 32 million. And here's what's included in the development contract. In the essence of time, I'll keep going through these, but feel free to ask any questions on this at the end. And some costs excluded from the contracts. And here just highlighting, these contracts are the industry norm in Canada. So I'd mentioned that funding protection plan we've introduced for this project that's unique to this project. What it does is really limit the need for cash calls from investors during construction. So if there are cost overruns during the construction period, we're going to follow these 3 steps to try and fund those cost overruns. So first, we try and arrange secondary financing. Second, the Class D limited partner and affiliate could go and arrange or loan money to the limited partnership. And then third and finally, we could go and raise Class C units as equity. The nice part about option 3 with Class C is that if we raise that equity, that new equity that comes in is not going to dilute the existing equity stake of the current investor pool. It's actually going to reduce the profit share on the general partner side. So if you're an initial investor and there's cost overruns and we have to raise more equity, that new equity that comes in is not going to dilute your profit share. Quick note on the CMHC financing. Towards the right there, you'll see the potential rate buy-down costs if rates are higher than our underwriting rate at completion. So you'll see at 4.2%, it's about $1.5 million. And at 4.4, it's about $2.3 million. So again, WCPG would be covering that $1.5 million cost if it ever got that high. And cap rate sensitivity, we've used 4.25% to value the building in our pro forma. We think that's a reasonable cap rate. Typically, cap rates follow interest rates. So with interest rates forecasted to come down, we do think cap rates will follow interest rates, which would increase the value of the building and provide stronger returns for investors. So we've shown some different scenarios there. And the returns. So the business plan is very much to sell this building at stabilization for investors who come in on that October 15th closing. That would be about a 2.3-year investment duration and would generate approximately a 21% annualized return. And this is just a little insight into some of the analysis we do with our pro forma. This is our 10-year cash flow. So we'll come up with some different exit timings and plug in all our assumptions that we've generated. So to conclude, highlighting some of the key takeaways here. From an investment standpoint, I think this project is significantly de-risked. We have our development permit, we have our excavation permit, work started on site, the financing is in place, we funded our first draw. The budget's been reviewed by the bank. And everything's rolling on that front. There's fixed price contracts, which provide certainty for investors. We've introduced a few programs unique to this investment that I think also provide a lot more comfort and certainty for investors. And also just the North Vancouver market. It's a market I'm really excited about. I think we're really fortunate to be positioned like this with this building, to be bringing this rental stock to North Vancouver in 2026, just based on, supply demand. It's a market that very much needs more housing. And we're in a position to deliver that. And I mentioned exit potential. Talking to our broker team, there is a ton of appetite for new purpose-built rental product in North Vancouver. We just saw a competitor building sell in Central Lonsdale in Q3 this year. So very confident on that exit timing. And also, we'll be hosting a site visit November 2nd. If you're interested in coming by the site, seeing what's going on there, connect with myself or the Integrated Equities team. Happy to get you registered for that. So yeah,